Thursday the 13th, good morning and welcome to Bloomberg UK. I'm Guy Johnson in London. Francine is off today. Let me run you through a few things that you need to know. Prime Minister Rishi Sunak has taken a pause from the election campaign to attend the G7 meeting. It's being hosted by the Italian Prime Minister, Giorgia Meloni. We're going to come back and talk more about the UK more broadly at the moment, but I want to focus on this because I think it's really important as to what is happening there. We've just had some breaking news, which we've been kind of expecting. We're now starting to get the details on what is actually the reality. It's related to how Russian assets, frozen Russian assets, largely in Europe, are going to be used to fund Ukrainian aid. I want to get back to Bari in southern Italy. Ollie Crook has the details. Ollie, run us through what we've been learning over the last couple of minutes.
Yeah, guys, so this is really sort of important in terms of really hammering down the structure of what this is going to look like, that disbursement of trying to tap those underlying Russian assets, of which there are about 300 billion that are being held right now, mostly in Europe, and dispersing that about $50 billion over to Ukraine. So what we understand and what we've just broken in the last few minutes is that the form that this will take is multiple loans done sort of bilaterally between each of the G7 countries. The EU will be its own bloc, and each of these loans will be then given to Ukraine. And this is the key detail here. The question was, how much will everyone contribute? It's going to be proportional to the size of the economy. And these are sort of the details that we're getting and sort of the nitty-gritty that the G7 leaders have been here to work out. Because, of course, Guy, there's been a political agreement for this for some time. These are the details of how it's going to work. And then eventually those loans that are given by those individual countries and that bloc will be repaid over time by the sort of proceeds from the Russian assets, the profits from the Russian assets going forward. And this is really important, Guy, because this is a bid for a lot of these countries, which now increasingly more than ever face political challenges with their sort of possible support of Ukraine going forward, to say nothing of the U.S. election, where Donald Trump has sort of been a wild card for what the support would look like for Ukraine. This is the move in order to get that financial footing for the Ukrainian defense to become solid for the years to come, really.
Ollie, you talk about the November elections in the United States. Let's factor that into our thinking. How quickly will this money be available? When does it come? Does it come pre-November or after November?
Well, Guy, this is another detail that we're chasing, and I think that the difficulty is that they want to come out with this very strong political message to say, we agree to get this done by year end, and really what they would like to do is really to get it out and get it to Ukraine before the year end. Remember, the election is, of course, in November, but the inauguration is not till January. So I think from the Biden administration's perspective, as long as they can get that deal, figure out all those little nitty-gritty details, and then get those payments flowing by the end of this year, which is the goal from what we understand, that will be sort of safe, so-called, from any sort of sabotage.
Ollie, is this money going to be used for buying weapons? Is this going to be money that's used to support the military? Is this money that's going to be used to support the civilian population, reconstruction? Are there any limits or criteria that are being applied to the money that is going to be given to Ukraine?
Yeah, guys, so we understand that this money is going to be used for military purposes, but also for reconstruction. But you're right to point this out as a major question, particularly within the EU, right, Guy? There have been member states of the EU with their other various funding programs that have been very reticent to sign up to anything that would go, say, towards lethal aid to Ukraine, right? There's been some objections, not the least of which from Hungary, which has really thrown a lot of spanner in the works. So we don't have all of the details yet, but what we do understand from the architects of this is what they would like to see it go to is that military spend and also that reconstruction.
Ollie Crook joining us at the G7, from the G7 in Bari, Italy. Thank you very much indeed. As we continue to get more details on this story that we've just broken here at Bloomberg, we will bring them to you as the rest of this programme and the morning progresses. Let's talk about what else is going to happen this morning. Over the coming few hours, I think kind of circa 11 o'clock, the opposition leader, Keir Starmer, is going to release his party, the Labour Party's election manifesto. He's talking about the fact that wealth creation is going to be at the heart of this manifesto, at the heart of his campaign. Now, of course, at the moment, he has a, let's call it circa 20-point lead over the Conservatives, and it looks like his party is on track to reassume power. It's the first time they will reassume power in 14 years. The general election, of course, is next month. Both Keir Starmer and Rishi Sunak took part in a Sky News event last night. They battled for the upper hand when it came to taxation and, of course, inflation.
It's a very forward-looking manifesto, but there's nothing in our manifesto that requires us to raise tax.
You've swerved the top 5% of earners there.
Nothing requires us to raise tax. And I tell you, I do want to... You're challenging me and I want to deal with this. I want to do things differently. I want to grow our economy. I accept that previous Labour leaders have sort of pulled the tax lever every single time and driven up spending. I want to grow our economy. The manifesto tomorrow will be a manifesto, a plan for wealth creation.
Promises 1 and 2, halving inflation, growing the economy. You've done that.
Well, the most important priority was the first one, because when I got this job, inflation was at 11%. And I think everyone knows the last few years have been difficult, the impact that was having on all your bills. Every week you were seeing the impact in your shop, and that's why my priority was to bring down inflation, so to ease that burden. And it wasn't a given, and it was 11%. Now it's back to normal.
Rishi Sunak, Keir Starmer, talking last night with Beth Rigby at the Sky events. Let's kind of pick up and kind of digest a little bit what we got there and what we didn't get, crucially, because we're waiting the Labour Party manifesto a little bit later on. John Stepek, Bloomberg's John Stepek, standing next to me now. John, we've learnt a lot about kind of where taxes aren't going up. I'm kind of still looking for clarity on where they are going up.
Yes, I think I'm not sure you're going to get clarity, to be honest, Guy. Yeah, because I think that one of the things that it seems quite clear from the way that Labour's talking that they would prefer to focus on the idea that the money can largely come from growth that they are going to kind of generate for the economy in some way. Because I think that there's far too much... There's a sense that they don't want to kind of scare the horses. And all of the things that they might raise that they haven't already ruled out all have the potential to kind of frighten people off. So people have kind of talked about the council tax revaluation, for example. Now, council tax for non-UK viewers is kind of Britain's property tax basically. And it hasn't actually changed since 1991, or at least the basis. So all our house prices, it's based on house prices in 1991. Obviously, since 1991, the makeup of house prices across the country has changed a lot. So house prices in London have kind of skyrocketed relative to the north of England, for example. So if you were to revalue council tax, you could raise a lot more money. But obviously, you create a lot of winners and losers within that. And it's a very complicated thing to do. And voters are really touchy about anything that, you know, touches on their houses, even though a lot of voters would probably pay less council tax, you know, the less wealthy you are. The other things are like dividend tax and capital gains tax, so they haven't ruled out anything about that. But again, if you want to be seen as a part, you know, Labour obviously has this kind of hang-up about being seen as not being hostile to business. Because the traditional views of the parties, you know, Tories are pro-business, Labour are kind of anti-wealth. And the risk there is if they spell out any plans they might have to do with CGT more generally.
How capital gains, how would that undermine this kind of relationship that has been, let's call it getting better between business and Labour? If you raise CGT tax, capital gains tax, how big an impact could that have?
Well, I think the problem is you're kind of saying to people with wealth and you're saying to entrepreneurs that you are, you know, a target. We've already got the 20% VAT on private schools, which, whether you agree with it or not, is an ideological thing rather than a revenue-raising measure, because it basically raises peanuts. And so you already have this, I guess, sort of like slight anti-rich aspect about them. And obviously, the last, you know, leader was Jeremy Corbyn, who was very explicitly, anti-wealth, you know. And so I think that, you know, especially when you get Rachel Reeves putting across her Bank of England image and a very kind of sensible, you know, pro-growth, we're not going to do anything to kind of, you know, scare anyone away, then I don't think that they will want to be terribly explicit about what they might do with, you know, for want of a better word, wealth taxes. I mean, it's also worth remembering that capital gains tax has become a lot less generous, even under the Tories. You know, the allowances have been cut. You know, we no longer have indexation. So capital gains tax is very much a tax on inflation. rather than on, genuine real asset growth.
So if you were to raise it, maybe indexation comes back, would be maybe something.
That would be nice.
Yeah, it would be nice. Hold that thought. We might come back to it a little bit later. John's going to come back a little bit later. We'll carry on the conversation. I want to talk a little bit about kind of what is happening with the foreign policy story out of the UK right now. What would change in UK foreign policy, both kind of globally and particularly in relation to what is happening with the UK's relations with the EU? Bronwen Maddox, Director and Chief Executive of Chatham House, joins us now. Bronwen, great to speak with you. Let's talk about foreign policy. Let's talk about how that could evolve. Do you get a sense that UK foreign policy would materially change in any shape or form were we to see a change of government at this stage?
It's one of the areas where there's least difference between the parties, at least on paper. The biggest difference is probably over Rwanda and immigration policy, where the Conservatives are saying they're pushing ahead with this, and Labour said it will get rid of the Rwanda flights and the possibility of them on its first day. Then you have a difference of tone over Europe, and the question is how significant this might be. It certainly is a difference of tone that, say, those potential conservative voters that lean towards reform and are very much against Brexit might find very disconcerting. And Labour wants to get really as close to Europe as Europe will let it without conceding freedom of movement and so on. It's a good question, which is really up to Europe, of how much wiggle room there is there. But we can expect a change of tone. I'm not sure that much in practice. And then you have really great areas of similarity of trying to deal with China in a way that allows us to protect ourselves, but also trade with them and so on. Ukraine, they're in the same position, though Labour has never been terribly comfortable with the idea of long wars. That said, many defence secretaries, good ones, have been Labour. So big areas of similarity and a few differences.
What do you think defence spending would look like? Do you think we'd see significant differences there? As you say, like in the past, we have seen defence secretaries under Labour being some of the biggest proponents of a growing and a more effective military. What do you make of Labour's plans on defence, and how different do you think the military could look after a few years of a Labour government?
Again, on paper, there's very little difference, particularly now that Keir Starmer has said that he would uphold the Trident nuclear deterrent and indeed, put more money into repairing, refurbishing it and so on. I think, again, it's a question of tone and how Labour, if it gets in, responds to events. And the big event hanging out there, obviously, is Ukraine. What happens there? Because for all that the parties have been battling over percentage points of GDP and both now committed to 2.5%. We at Chatham House think it actually probably needs to be a bit higher to do what they say. The question is, what are you spending it on? And what it needs to be spent on is actually repair of armaments and munitions and missiles and so on, providing more of those to Britain and to Ukraine. So I think we'd have to see in response to events. But if Ukraine is going to continue to have really a very, very tough time, there is going to be pressure on Britain to spend more there. And if a US president gets in who does not or cannot, through Congress, get support, then again, pressure on Britain.
Bronwen, let's talk a little bit about what's happening with and you referenced this earlier, with the EU. You say that the Labour Party would like to get closer, but it really is up to the EU to decide kind of how that is going to work. Given the consequential nature of the relationship the UK is going to have with the EU going forward, why is this such a small part of this election debate? Why are all the major parties so terrified, it seems, of talking about how the relationship could get closer in a different form, but a more workable relationship? Even the Liberal Democrats kind of buried it at the back end of their manifesto, their Orange Manifesto. Why is this something that the parties don't want to talk about, given the consequential nature of that relationship?
You're absolutely right. And it is Britain's closest and largest trading partner. The reason is that the two main parties do not want to say the word Brexit. They don't want to frighten off voters who were very much for Brexit by suggesting that it might in any way be compromised or even reconsidered. And Labour has said it really doesn't want to go there. It also, I think, in Labour's case, doesn't want to promise things that it can't deliver, because the European Union it might well much prefer to deal with Labour and be much smilier in dealing with a party that has not been associated in the same way with Brexit. But on the other hand, for the EU, it is really sacrosanct that if you're going to enjoy the benefits of the single market, you have to accept things like freedom of movement of people and various other points, and that is for Labour somewhere that it just can't go. So we're really onto smaller things about students, about in the jargon, phytosanitary agreements about food products crossing borders without as much paperwork. But it's very hard to make a big inroad into that relationship without doing something like joining the customs union, which would mean scrapping the trade relationships that Britain has already begun to write for itself, and so on. So there's not an awful lot of wiggle room there, I think.
Yeah, very effective, some of those customs relationships that we've been dealing with so far and signing up to. I just wonder whether the maths might ultimately speak through on that front. Bronwen Maddox, Director and Chief Executive of Chatham House, thank you very much indeed. The other area that we haven't talked about yet, of course, is what is happening in the housing market. Housing affordability, a major issue in next month's election. We're going to speak exclusively next to the CEO of property data company Zoopla. That conversation is next. This is Bloomberg. Talk about another major issue with the UK election, housing affordability, what's happening with the rental market, how do you get onto the property ladder, all key issues. The Conservatives, of course, plan to abolish stamp duty for first-time home purchases, that number up to £425,000. Labour promising to build more homes and give mortgage guarantees to first-time buyers. What does this all mean? Let's find out. Let's get back to the Founders Forum. Tom McKenzie is standing by with a great guest to talk to about this. Tom.
Guy, thank you very much indeed. Yes, joined by the CEO of Houseful, is the parent company of Zoopla, so the CEO of that company as well, Charlie Bryant. Charlie, thanks for joining us. Guy was just outlining some of the proposals from the Labour Party and the current Conservative government around housing and how to fix UK housing. Let's start, there's a few things here. Let's start with the Help to Buy proposition from the current government. They want to put that in place, a new and improved, is the way they've described it, Help to Buy. So essentially they give a 20% loan to first-time buyers. That means the deposit can be as little as 5%. How helpful or not is a policy like that? Does it just reward developers? Does it just push up prices? Or does it meaningfully impact the housing market to the positive?
I think it does help more people get onto the housing ladder. And, you know, we've had Help to Buy in previous iterations. And what we saw there is it actually helped a lot of younger people in particular to get onto the housing ladder. But it was very pro the house builders in the sense that at that point in time, it was only available on new build housing. So really propped up the house building sector. You know, I think what we want to see now is something that helps both resale and new build properties and is sustainable for the long term in helping more people get onto the housing ladder and get out of what is a really, really competitive rental market right now.
Would a scrapping of stamp duty for first-time buyers be part of that mix for you?
I think it can certainly help. The reality is the average home in the UK costs $300,000. So actually there are a large number of homes already that fall outside the stamp duty net. But if that was, as has been tabled, raised to $400,000 plus, clearly that would bring a lot of homes outside of the stamp duty net. But the reality is the vast majority of stamp duty today is raised from the smallest proportion of home sales, right at the top end of the home price bands.
And mortgage guarantees is a proposal. Labour will be coming out with their manifesto later today. We expect to see something in terms of mortgage guarantees. Is that something you'd welcome?
I think it helps the banks get greater certainty about higher LTV lending. Undoubtedly, the biggest issue with mortgages for first-time buyers right now is just the absolute size of deposit that's needed. So if there is, again, a sustainable and workable structure that isn't just pushing a problem down the road, that helps more people buy a home with a smaller deposit, undoubtedly that helps, and we see it in a number of places on the continent. It's worked pretty well.
What is the health of the UK housing market right now. It's been more resilient than many had predicted in an environment of rates of north of 5%, 5.25%. What is the current feel? You've got a finger on the pulse of this housing market.
I think that's right. So, you know, if we look at it, the number of homes for sale right now is 20% above where it was last year. Estate agents, on average, have 31 properties for sale at the moment, which is the highest number for 8 years. But the good news is a lot of those people who are selling their homes are also looking to buy homes. So you're beginning to get that momentum back into the housing market.
Do we need a rate cut?
Listen, a rate cut is always helpful, obviously, because it brings the cost of home ownership down. I think the most important thing for the health of the housing market, though, is predictability. If people are unsure whether rates are going to go up or down, what they tend to do is they tend to sit on their hands a little bit and say, OK, I'll play out and see what happens before making a move.
In terms of house building, governments, and not just this government, previous governments have missed the targets. They're now selling, current government, 1.6 million homes over 5 years. Labour, 1.5 million. What is standing in the way of more house building? We sit here in the Cotswolds, the bucolic Cotswolds. Do we need to be concreting over these green fields to build new houses?
Hopefully not, because they are genuinely beautiful out there. But listen, it's a combination of things. I mean, I would say over the last few years, there have been a bunch of, hopefully, non-long-term extraneous impacts on the house building sector. So there's obviously been, post-pandemic immediately, the lack of availability of building materials. Then there's been the price inflation in building materials. That for a long period of time, there was a real issue with what had historically been a big reliance on migrant labour for building sites. So, you know, those, I would say, will have been more...
But does planning need to be reformed? Do you buy these targets, are they achievable?
As you say, no one's achieved the targets before. We've generally built less than 200,000 homes in the UK for a fairly long period of time. The current targets imply something nearer 300,000 homes per annum. So planning is certainly going to play a part of that. But it's inevitably hugely controversial, as you say, particularly in the bucolic Cotswolds.
What's happening with the rental market? You've seen rental prices come off a little bit, but you've talked to me about your concern about the rental market.
Yes, the reality is the rental market has not changed in terms of the overall level of private rental supply in 10 plus years. It's still about 5.4 million homes, yet people have been living longer. First-time buyers are getting older. You know, you used to buy a home in your 20s, it's now in your late 30s on average. And net migration outstrips the number of homes being built. So yes, more and more people are turning to the rental market. The reality is, whilst rental supply is up about 18% versus where it was last year, the reality is there are 15 people chasing every home for rent, as opposed to 6 people chasing every home for rent pre the pandemic. And in a supply-demand market like that, inevitably that pushed rental prices up dramatically.
And you see rental prices staying elevated for the medium to long term?
Listen, the rate of growth has come down. You know, a year ago it was 13%, now it's about 6.7%. You've seen rental falls in some areas, but that's driven by affordability rather than supply and demand. They just got to a level where they'd outstripped wage growth by so much that people just couldn't afford to pay more rent.
OK, 15 to 1. It's still a statistic, isn't it, that really raises the eyebrows. Charlie Bryant, thank you very much indeed, CEO of Houseful, parent company of Zoopla, CEO of that company as well. Guy, back to you.
Great conversation, Tom, really useful, just in terms of the challenges and the fact that we just haven't delivered on the targets of house building consistently year after year after year. Is that about to change? You can understand why people are sceptical. The CEO of Zoopla there on his views surrounding that. I want to take you back to Italy. I just want to remind you that this event is happening. The G7 is taking place right now. You are currently seeing arrivals of the leadership in Bari. That looks like Charles Michel joining. My eyesight may deceive me, but I will get a close-up right now. It is. There you go. Meeting Giorgia Meloni, the Italian Prime Minister. So we're watching arrivals at this event that is taking place in Italy. We have been obviously tracking developments. It looks like we have seen an agreement between the G7 leadership on exactly how frozen Russian assets will ultimately be used to help and support the Ukrainian war efforts and also the reconstruction effort that is taking place. We'll continue to watch what is happening there. In terms of the markets, let me just kind of give you a sense of what is going on right now. We are watching Equity markets stabilising, obviously a big gap higher as a result of the CPI print we saw yesterday, a little fade after we saw the Fed dot plots being revealed. This morning it looks like the S&P is going to open up circa 0.2%. That's what the fair value calculation is currently pointing to right now on my Bloomberg terminal. So it looks like we're going to see a bit of stabilisation maybe later on today. We've still got PPI to come out. We've still got a number of other data claims to watch out for as the session develops. The Pulse is up next. No, the brief is up next. This is Bloomberg.